in 2008, 2011, during the Lehman crisis, gold shot up to an all-time high in 1900. Silver touched very briefly on 50. And then eventually they came back down as people got confidence in the system. This time, the system can't be kicked down the road. So all of this value, if you look at Exter's pyramid, sitting at the Exter was a central banker himself, and he was an advisor to Volcker. And Volcker asked Exter because he was a central banker friend, had done central banks in other countries. He said, how do we manage this? And Exter came up with the pyramid. And he said, all these derivatives on top, stocks, real estate, all this stuff is a derivative of gold and silver. Even cash is a derivative of gold and silver. All of these contracts, mortgage-backed securities, are a derivative of gold and silver. Gold and silver are the ultimate money. This is the famous Exter's pyramid. And when you have these big economic collapses, all that fake value or money in dollars and stocks and real estate and all this other stuff that's in a giant bubble collapses down to the real assets, which are gold and silver. And we expect that's what's going to happen. And the central banks know this. The central bankers were the ones that developed Exter's pyramid. That's why they give you the dollars and they're buying all the gold. Because when the collapse happens through Basel III, through the BIS, Bank for International Settlements, the mega bank, which controls all the other banks, has now got it that gold is a high quality liquid asset. Well, why do central banks been buying all the gold? They want to survive. So they're hoarding all the gold and pushing, the worthless paper crap out to the people. And that's essentially the setup. And then when it collapses, all the value is going to come to gold and silver. Now, if you're an individual and you've invested in gold and silver, that gives you an advantage because you can be like the central banks.
Hey guys, welcome back to Capital Cosm. Today, I'm thrilled to have Robert Kientz from the Freedom Report. Robert, thanks for coming on.
Hey man, thanks for inviting me. I appreciate it.
Cool. Well, as always, guys, be sure to hit the like and subscribe button if you haven't already. If you're getting value out of these videos, it'd be much appreciated. We are posting just about daily now, so you don't want to miss an episode. Be sure to hit that subscribe button as well as that bell notification. With that said, Robert, for people who may not know who you are, this is your maiden voyage. You have a YouTube channel, The Freedom Report, but tell us a little bit about yourself. Who are you?
So basically, I grew up here in Texas, still in Texas area. I was in tech for about 25 years, business and technology. My corporate career was in IT, cybersecurity, audit, that type of thing. I got to see a lot of cool stuff. In 2008, I was in the middle of a mortgage. I was working for Ernst & Young in consulting and audit. And a project came to us for mortgage servicing. We took 52,000 loans from a defunct service provider. We fixed them, built data analytics model, all that kind of stuff. And I saw the mortgage market from the inside as it was blowing up during the Lehman crisis. And even before Lehman had been announced, we were working on that. So I got an inside view of everything that happened basically during the Great Recession. It woke me up and I took a different career path. I began writing, wrote a book. I was a syndicated writer. Eventually made my way to YouTube and social media and have changed my career. I no longer work in that career. I work full-time in this industry now. I have my own business and I'm about to start a new job there. So, that's pretty much what I do full-time. And my goal here is to help educate people on finance and economics, because when that happened, I didn't understand what was going on because the conventional wisdom in finance and the teaching of the schools didn't tell us. And so I had to go make sense of it. So I found Austrian economics, gold, silver, honest money, all that kind of stuff. That's really been my journey the last few years, is getting into that full time and, doing things to help educate people. And like me, who, the next recession's coming. And if you're not prepared, it's going to be painful this time around. So that's what I do pretty much full time now.
Yeah, I think there's a bit of a parallel between your journey and mine. I also come from tech, and I've kind of, taken this different path recently. So it behooves one not to really spend the time to understand what's going on with the markets, the economy and finance as a whole, because like you said, we don't learn this stuff in school. But Robert, before we get too deep into some stuff, let's take a macro view. What is kind of like your 30,000 foot view of the markets right now, the economy? You did allude to a recession. You can touch on that if you want. But what are you seeing out there in terms of broad strokes?
Broad strokes is we're about to have a large stock market correction, although that may be the last and final sort of step before we get into the next recession. All the economic data, which by the way is manipulated by the government. I proved that in my book. I spent 50 pages in chapter 2 proving that out back in 2009. All the data is manipulated or massaged or changed to where you can't compare the data now versus 20, 30, 40 years ago. So it's a lot of hiding the truth. It's massaging the truth to make the government seem like they're more in control than they are. And the reality is we're heading off the edge of a cliff, and it's nothing that the government can do to stop it. In fact, a lot of the spending that we've had, a lot of the hidden spending that we've had with FASB 56 and other things like that, that people don't even know about. I mean, that's going deep in the weeds. People don't understand what's happened. But across the world, just to summarize it, we're having issues across the world. The Japanese yen is crashing, and the central bank, them raising interest rates, caused people to pull out of that carry trade and cause them to stop investing in the U.S. stock market. So we had a nice little correction there recently. But there are bigger underlying factors in the economy that are going to cause it to basically crash. It's too much money printing, too much debt, and now we're spending about $1.8 to $2 for every dollar of productive activity we get in GDP or in growth in the economy. And Kenneth Rogoff and one other person from Harvard wrote a book back in 2009 after they studied the last crash. And they looked back through history, and every society in which you had greater than 90% debt to GDP, meaning you have 90% of your yearly output is covered by 90, you have 90% of your debt. When you get to that level, there's no return. And at one point we got to 140 during the lockdowns in 2020 and the pandemic. So we recovered a little bit from that, but history shows pretty much we've got to go clean all that out. They've kicked the can down the road since 2000 in the tech crisis, because this started way back when. All the capital flow issues and currency issues started way back. And now we're getting to the point where it's going to be the end of this system. And one more thing I'll throw in here, a long answer, but I want to give people something to chew on and to research for your viewers. Go look up conjunctive waves, or the last turning, if you will, or the fourth turning, if you will. Same exact information presented two different ways. Kondratiev was a political economist in Russia. The government there commissioned him to study why they had recessions, and he basically studied it and pointed back and said, well, it happens every 80 years in every society, we have a major recession or a major event. They jailed him for that, but that research made its way across the world. Neil Howe popularized that in a more recent book called The Fourth Turning. And about every 4 generations, about every 80 years, we have a big problem. Revolution, Civil War, Great Depression. Now we're at that next turning. To add to that, one more piece, Sir John Glubb, Glubb, did research in 1971 that looked at cycles from a cultural and political perspective, and he also found the tie-in to economics. And he found that about every 240 to 250 years, we have a nation-state cycle, meaning about every 250 years, we have a new dominant riser as a nation-state that takes over the dominant pole position. And we're about 240-something years from our Declaration of Independence, which is the event that kicked off our ascendance into, dominance as a nation. So we're going through a bunch of different cycles. It's not just a recession. It is a currency crisis. It's a 250-year nation-state cycle. We got to clean up our debt and our mess. And that's going to move us out of the pole position as the leading currency and the leading economy. It's probably going to put China in front. And this will play out over the next 5 to 10 years.
So I do have the Fourth Turning here behind me. I haven't read all of it yet, but why do these cycles work that they work? Is it simply because you mentioned 80-year cycles? Is that simply because the older generation dies off and takes the lessons of history with them, and us as people, as humans, we tend to repeat a lot of those same mistakes? Or is there something deeper to that?
It is, but it does go deeper. There's a mathematical concept and there is a psychological concept. Essentially, you have spring, summer, fall, winter, just like our seasons. 4 seasons, and it takes 4 turnings to have a major event. Springtime would be like us emerging from World War II and building the world's largest manufacturing economy. Summer was the baby boomer generation taking advantage of that and building the biggest wealth, per capita of any generation in the history of the world. The fall generation are the millennials who cannot earn what their parents earned, don't have a fraction of the wealth that their parents had. Well, I actually said the Gen Xers, my generation, was the summertime. Millennials are the fall, and the wintertime and then rebirth into spring is going to be the Gen Zers. The Gen Zers, per that theory, are going to bring us out of the calamity, and they're going to be the generation that sort of rescues us and helps rebuild. That's the model. Like I said, it's occurred in every country in the history of the world of which we have economic data. And it speaks to, yes, about how people view things. When you're in the springtime and everything's sunny and shiny, you don't pay attention to the bad stuff. And the bad stuff happens in the background, happens in the background. Eventually, the lessons of the wartime generation. My dad was in World War II. He landed on D-Day. He was a naval radio operator and a medic. And they brought him inland because he was a medic and a radio operator. And he marched with the armies all the way to Germany. That generation understands sacrifice, economic issues, and war. It's 4 generations since then. There's almost nobody around that understands that. And there's something about human psychology in which we forget the lessons of our forefathers. Essentially, bad times make hard men, or good men make bad times, that whole phrase. And then frivolous times, or times of abundance make weak men. And so we fall down on all the things that got us to where we went, and we fall down on all the cultural and religious and societal norms that got us to where we were. And then we get soft and lazy. We try to solve the world's problems. We try to solve everything through technology. We allow massive migration and thinking that we can change the world. Everybody come in and we'll change you. It never works every single time. The same pattern is repeated through every nation state in history, dating back to the ancient Assyrians, the dominant nation states. It's happening in the US. The guys coming across the border. Guess what? This happened in Rome. It happened in Assyria. It happened in Spain. It happened in England. So these are the same patterns we're repeating. And researchers don't know the root cause. We just know the symptoms. The root cause has to do with mathematical cycles and psychology in the human brain, which needs to be studied a little bit more. But that's essentially describing how the process works. And it's like clockwork. We see it all the time.
Right. You also did mention the 120% debt to GDP ratio that we currently have here in the United States. And historically speaking, once it gets above 90%, that's when you're expected to see problems.
Yeah.
But, by that same token, as long as we get someone who's willing to buy our debt, can't they foreseeably kick this can down the road? I mean, theoretically speaking, you can have a 200% debt to GDP ratio as long as there's a sucker out there that'll actually purchase our debt. So with that said, how much longer do you think that they can actually kick the can? Because I remember very vividly in 2008, people thought that was it. That was a swan song. But they've managed to, delay the reckoning for almost 2 decades now. So is there a possibility that, they could kind of extend this thing out?
Well, if you look at natural law and mathematical constants, if you want to keep your promises and actually pay back the debt and not have people censure you or bomb you or do whatever, sanction you, there's mathematical concept around paying the debt and making sure that people are whole. Right now, a lot of the BRICS nations, the Chinas, the Russias, Brazils of the world aren't buying our debt anymore. A lot of this is being monetized directly by the Fed. There have been several failed auctions over the last 7 to 8 years, which have been covered up by central bank buying. One only has to look at the Federal Reserve's balance sheet to know this. And this pattern reemerges every single time when you have so much debt that nobody else wants it. And the difference this time is when Nixon took us off the gold standard in 1971 and our dollar was no longer backed by any commodity money or anything of value. We backed it by the good faith of the government and our military. The problem is the militaries of the world have almost caught up to us. They basically stole our technology and caught up to us. And they don't care about our debt or the dollar anymore. The entire world is de-dollarizing. This has come out in multiple studies of central banks and basically said, we're getting rid of our dollar reserves. They're dumping it. That's what's forcing inflation back to America. This is the slow dump before the big dump. As we get closer to a deep global recession, there will be a big dump. And then nobody wants to do it now because it'll collapse the dollar and they hold dollars in debt. But they're slowly getting rid of as much as they can, building alternative currency systems and building alternative payment systems. Zimbabwe has a gold-backed digital currency. China, Russia, and all the BRICS nations now are doing contracts in gold or in their currencies outside of the US dollar system and SWIFT. Because they no longer want it. They know that all the debt, it's all going to collapse because nobody wants to buy anymore. Plus, if you look at the economies around the world, they're not doing well. China's crashing right now. The real estate crash, their banking system has major issues. Their state-owned entities, which are the government and privately owned, co-owned businesses, which are prevalent in that country and prevalent in other similar countries, are collapsing. So China can't buy any more of our debt. Japan can't. The yen has been blowing up. What carried for so long was the carry trade, meaning you borrow in yen with almost 0%, and then you invest in U.S. stocks. The reason the stocks pulled back this summer is because the carry trade blew up in Japan because nobody's subsidizing Japan's debt. So if nobody's paying for Japan's debt, that's caused their yen currency to crash. They had to raise interest rates. That killed the carry trade. And all of a sudden now Japan's in a crash cycle. How long will that take? I don't know. I wrote in my book in 2009, it'd either be Europe or Japan that started off the global route and the global collapse. You could just print pure money to pay for the debt. The Fed, to some extent, is doing that. But once people sniff around that you've done that, it's a confidence game. People know at that point that you're a dead man walking, and they just drop it. You know, if you look back at the German hyperinflation, they printed a bunch of money, and then when people found out, they started that it was a confidence event. The money got printed long before they ever had the hyperinflation. It was a confidence event where people figured out the currency wasn't going to be worth anything, and they tried to reissue a new currency and blew that up too. And then they learned that you have to back it in hard commodity. And the economists around the world in the 20s and 30s who studied history, and they said, if you back any currency system with 40% gold and keep 40% gold in it, it will stay stable. Once you remove that 40% backing, every fiat currency system and debt system will always collapse. It's been true throughout history. And in this case, again, just to sum up, because the whole world is in a pure fiat system, unless space aliens come and buy all of our debt, there is no last resort. There's no last buyer. The buyer of US debt right now, the last buyer is the Fed. And the world has sniffed it out. That's why the central banks are buying more gold than in history. That's why they're setting up alternative payment systems, alternative currency systems, alternative trade systems. I mean, the entire world right now is being re-engineered because of what's coming to the dollar. And that's your testament right there that the world doesn't have faith. And the last people that will hold up the dollar will be the American people. But once all those dollars and that debt comes flooding back from the rest of the world, they're going to get a clue. They're going to rush into safer assets, maybe Bitcoin, gold, silver, whatever, food, land, and then it will collapse. And that will be, and there's never been a point in history in which a country has been able to buy all of their own debt and keep it going. It always collapses because people realize that both the currency and the debt have no value. Gresham's law, they get rid of all that stuff and they go to something that has value, and that's why that system collapses. Because at the end of the day, you got to pay the piper. You got to make your interest payments and you got to pay back the money you borrowed. And if you don't, it's game over. And we're getting to that point in the US where the numbers are so big, mathematically, we can't do it. And if we have a rise in interest rates, to 5, 6, 7%, the tax receipts that we tax people with will not pay the interest on the debt. We're already 34 trillion in debt. And like I said, sometimes at some point it becomes a math issue. And we're at the point at which the math just doesn't work anymore. And that's natural law. And essentially, really what it is the world is saying, we can't use your crappy currency and debt to get the stuff we need out of the ground to build the economy. It's not enough value anymore. And that's when natural law comes into play. The balance of our system basically says that currency is not worth enough anymore. Stop using it. And then people have to go to other systems of currency or money, go back to gold and go back to money and use that to finance all the things that we need every day. But you can't do that when your currency turns into toilet paper.
Yeah, oftentimes you hear people compare, the likes of Powell to Volcker and how he raised interest rates. But there's a clear distinction between this time and the 1980s. And the fact is that energy was a lot easier to extract back then as it is now. So it was a lot easier to grow your way out of deficits like that. Whereas you're kind of entering this, this era that instills an end to abundance. So you don't have the same luxuries. It's not the same environment as it was in the 1980s. You can't just run that same playbook. So my question to you, Rob, is this we pretty much have 100% rate cut probability according to the CME Fed Watch tool. Is this the beginning that you anticipate, starting maybe next month, where we head back into rate cutting cycle? And if so, are they gonna take this thing all the way down? Not because they want to, but because they most likely have to, for all the reasons that you kind of laid out.
Yeah, on the energy thing, yes, energy is more expensive. The US has a lot of oil and natural gas and thorium as a future technology, but we have no manufacturing capacity. So if we got into a crisis right now, we could, even if we have these energy resources, which we have, we can't grow our way out because we don't have the pipelines to do it. We don't have the technology. So it would take at least 5 to 10 to 15 years to ramp up that tech to grow our way out. And if you look at the Great Depression, after that happened, even after the war, and we got started building, it took 25 years for the stock market to reach parity with what it was before, the Great Depression. 25 years. Real estate took something like 18 to 20, I believe, if I remember. It takes time. It takes at least a generation to do all that. To answer your question, what was your second question? I'll answer that
No,
one.
I was just gonna ask, is this the beginning of a rate cutting cycle?
Oh, rate cutting with the Fed. The Fed almost has to do a rate cut here because of the election, and everybody says the Fed's not politicized. It's politicized. Actually, the Federal Reserve's not federal, has no reserves. It's owned by the mega banks in a share structure. It's not owned by the government. The government created it, but they created it in partnership with the banks to issue fiat currency, which we owe interest on. And some of the board governors are appointed by our government. The majority of them are not, by the way. So most of the management isn't even answerable to Congress. And that's why you see Congress getting angry.
Sorry, didn't mean to interrupt, but even like the Fed chair and stuff like that, he's anointed from a list that the president's given. It's not like he can just go pick some random guy that he wants. Right. He's given a list of choices that he chooses from. So it's a very controlled, selection. But anyways, like I said, didn't mean to interrupt.
No, it's okay. And that's true. And the Federal Reserve, along with all the other central banks in the world, are beholden to the BIS. The BIS is the policy making out of Europe, and they decide what the central banks do around the world. And that's why when the Fed does things and it doesn't match up with expectations, because they're not taking orders, they have no official chain of command to the U.S. Congress or the president. Their official chain of command is to their owners, which are the banks, which have established the BIS to set policy. And you don't hear that talked about by the news. Why most people are going to watch this video and say, who the hell is the BIS? Bank for International Settlements, go look it up. I've done plenty of videos. They control the world central banks in coordinated policy. So the policy that the Fed is running is an international worldwide currency policy, not a U.S. for the benefit of U.S. citizens policy. I do think, however, that the Fed is going to have to do at least one rate cut heading to the election cycle, because if they didn't, the entire market would revolt on them based upon what's going on in the economy. We have massive layoffs everywhere in our economy. GM has announced them. Lowe's and Home Depot have announced them. Stellantis, which is Chrysler and Jeep, everybody's laying off. Inflation's killing people. People can't find jobs. The jobs report is much worse than what they say, because mostly part-time. Most of those are going to immigrants, not existing native-born citizens. So this country is suffering deeply. And the companies, all of them are saying the outlook for the last part of the year is at lower consumer demand. And not only that, but the debt companies are coming out saying the consumers are loaded up on so much debt they can't even make the credit card payments. Auto defaults and credit card payment defaults are sitting at all-time highs right now, while credit card balances are sitting at all-time highs. This is a nasty combination. The Fed's going to have to do something now. They've got, 5.25 to 5.5% interest that they can cut. They need 5% in a normal recession. This isn't going to be normal. I think they're trying to hold 5% to soften the blow of the next recession if they can. So I think the Fed is going to be, and this is an IMF and BIS study, which basically proved this out over time. A normal recession, if you have at least 5 full percentage points, you can ease into that recession, and it doesn't stop it, but it keeps it from running away. Well, in this case, 5's not going to do it. The numbers are so big, 5 is a joke. That's not going to cut it. But what they're doing is they're holding that to delay the inevitable. They know the currency is going to collapse. They have the central bank digital currencies all mapped out. The U.S. Fed, according to the BIS website, is involved in that. They've run 3 pilot projects testing the central bank digital currencies for central bank systems across the entire world through Project Enbridge, Project Orem, all those projects. I've talked about that. We'll have another video on our channel next week with 2 experts going over that. One is former U.S. Navy intelligence, who's done a lot of research and was an advisor of mine on CBDCs for a long time. So CBDCs are the next system. They know the dollar is going to collapse. They wouldn't have generated the next system and tested it and have the tech stack all built out right now if they didn't know that this was coming. So we know that the dollar is going to go down. We know what the next system is. And right now, I think it's just management. It's management of perception, and it's management. They don't want people to revolt yet. They don't want people to know yet. Henry Ford said, back in the day, if you knew how the monetary system worked, there would be a revolt overnight. That's what they're trying to stop. All of this in the press, the presidential election, the Fed's jawboning is all to placate the market so they don't revolt because they're not ready yet. They're getting close to being ready, but they're not ready yet. And so they're trying to buy time. And by the way, China doesn't want it to crash right now either. They're trying to deleverage out of US debt without crashing the system. It's a balance. You can't just, China can't shove all their US poker chips in the table without collapsing the whole system. So everybody's trying to build the new and hold on to the old for as long as possible until at one point the math just doesn't add up. Everybody figures it out and it goes boom. And that's where we are. We're in the, to use these colloquialisms, the ninth inning, the 11th hour, blah, blah, blah. We're at the end of this system, but we've got some time to run, and it'll crash whenever the banks pull credit, just like they did to start the Great Depression and the big stock market crash in 1929. So whenever the banks decide they're ready, and the banks, by the way, run the BIS and run all the central banks, and they're running the CBDCs, and they're the biggest contributor to all the political campaigns around the world. They've bought off all the politicians at the national level. The only hope you have is the state and local. This is this system, okay? This system, they know there's a transition coming. They're trying to manage it until they can't anymore, and their new systems are ready. And everything's leading us up to that point.
Is that why it appears that an unrealized gains tax is pretty much inevitable? Because once that happens, once the dollar collapses, I mean, your house is going to be worth like $1 billion or something like that. So are they anticipating like a what was it called, Ludwig von Mises's crack up boom, essentially occurring? Could that be why that's part of the Democratic Party platform?
Yeah, I think the political powers, now the Republicans are doing it too, they're doing it in a different way. All the political powers realize they get their power from the dollar. So if they get their power from the dollar buys them votes through guns and butter or warfare and welfare, whatever you want, it buys them votes essentially. And the banks control the dollar. Who's controlling the politicians? The banks. The politicians are trying to hold on to power in the current system, anything that they can. The banks know we're going to a new system, so they're working with the politicians to put that into place. The politicians want that. They don't want to lose power. And no politician wants to be on duty when a big collapse happens. And I think that they see the problems and they don't want a big collapse. So they're trying to work with the banks, to do a lot of these things. It's essentially coming down to they're managing it until it's time to switch over, and nothing else matters. All the data that comes out is manipulated. All the stories are there to tell people a bedtime story, a fairy tale, so they don't understand. None of the math works out. This is the system that we're in. At this point, it's all just a matter of how much time do we have before they take over. Now, in terms of unrealized gains taxes, universal basic income, all that kind of stuff, what's that designed to do? It's designed to bail in. Look at Dodd-Frank and bail-in laws and stuff like that. What that does is it says we can take money out of your bank account and replace it with something equal value, right? Eminent domain policy. If they're going to buy your real estate for a road, they got to pay you something. They don't usually pay you what it's worth. In this case, we think that they're going to replace our bank valuations with either another type of funding money or bank stock or something that is equal value by law. And they're going to use all that money to manage the collapse. But if you look at like unrealized gains, it's the same thing. They're just sucking value out of the economy. All the things that they have set up is to suck as much value out of the economy as they can. One, it's a wealth transfer to the ultra rich, but two, it's enough money in the system to kind of keep it going until they can manage that transition. And if you look at the Republican platform, I was at the Bitcoin conference a few weeks ago. I was there watching Trump, and Trump and RFK both said similar things, slightly different, but I'll summarize. Trump wants to buy 1 million Bitcoin. RFK wants to buy 4 million. RFK wants to give it directly to the Fed, which I said, you're insane because it's not the government. I don't think he understands that. Trump said, we want to stick it in a strategic reserve, 1 million Bitcoin. And then we're going to watch the valuation go up, and then we're going to use it to pay off the debt. Well, for Bitcoin to pay off the 34 trillion in debt we have, plus whatever debt they're going to add to it over the next 20 years, this 20-year plan, Bitcoin would have to go to an insane amount. So it's either a hyperinflation in Bitcoin. So in other words, if you look at it, What the Republicans want to do is they want to take the hyperinflation of the dollar, feed it into Bitcoin, pay off the debt, and collapse Bitcoin. They're just trying another layer of fiat currency. For everybody that owns Bitcoin out there, if the U.S. government is successful in doing this, you're going to get really high valuations on Bitcoin, and then one day, after the government dumps it, you're going to be looking at Bitcoin at $1,000. You're going to lose all your value. And I think what they're trying to do is they're trying to use the competitor to the dollar to absorb the problems with the dollar and maintain the dollar. It won't work. So all of these systems are designed just to perpetuate the dollar. They know the math speaks that it's going to collapse. They're just trying to perpetuate as long as they can. And each side has their ways of doing it. It's a more Marxist collectivist side on the Democrats. It's more of the, oh, let's play financial tricks on the Republican side. But neither branch or neither party really has the answer. They're all just trying to perpetuate the system. The banks at the end of the day know the system is going to collapse. They don't care. The banks don't give a crap about the politicians because they don't control the monetary flows. They're going to let the politicians placate the public with all these plans. And the public's going to say, oh, good, if we just do this, it'll solve the problem. They're going to vote for whoever. And whoever gets elected, it doesn't matter. As soon as the banks pull that money away and that credit away, it does not matter what you have. The whole system goes boom, because it's all right now. It's all a big Ponzi. And there isn't enough value in the system to account for the debt. It must collapse. And all the bank's got to do is cut that credit line. And I don't care what you have in place. It's over. Unless you have 40% gold back in the system. And we supposedly have 8,000 tons of gold in either Fort Knox or the basement of the New York Fed. And guess what? It hadn't been audited in almost 60 years. So I don't know what kind of reassurance that would be to the people.
Yeah, let's go ahead and touch on gold for a second. Gold's been making a new all-time high just about weekly now. Silver's trailing a little behind, still 40% off its all-time high. What's your overall take on the gold and silver market right now? Is gold sniffing out something? And then what does a lagging silver price portend to? Are you in the market for gold and silver? Then if so, please consider Miles Franklin. They are my gold and silver dealer of choice. So not only do they have super competitive prices that you're going to have a really hard time finding elsewhere, but then they also have top-notch customer support. I know Andy Schechtman, the owner of Miles Franklin, top-notch guy. I wouldn't be recommending them to you if I didn't have faith in their product. But what you really want to do, however, you want to email them at info@milesfranklin.com, and you want to say that Capital Cosm sent me in the description line, because when you do that, you can get access to their special pricing sheet. You want to get that special pricing sheet because you're going to get special prices that you won't find on the website itself. So email them at info@milesfranklin.com. Tell them that Capital Cosm sent you, and you won't be heckled with spam emails, etc. There's no commitment necessary. I promise you that. And with that said, I will let you get back to the video.
Typically, gold goes first if we're talking about economic cycle revaluation. So gold and silver are commodities. Gold's about 20-something% used in industry, and the rest is as money. But it's treated as a commodity. Now, it's traded on the commodity markets because they don't want it to be money. So they hide it as a commodity. I once had a Series 3 license where we studied currencies and commodities that were on the same exam, and gold was a commodity. 5,000 years it's money, but all of a sudden it's a commodity. Silver is mostly a commodity because silver has become the most important mineral on planet Earth. We wouldn't be able to have this interview without silver. You could not drive a car. You could not have a solar panel. The medical care you get would be severely reduced. You could not have a Tomahawk missile. Most of the goods that iPhones, most of the goods that we rely on now in the technology age use at least some silver, and there is no metal that can substitute for its size, all of its attributes together. You could substitute gold and copper and aluminum, but that takes us back 30, 40, 50 years from where we are in terms of technological advancement. So silver has become super important. That price is managed through the COMEX and through the LBMA in London on purpose. Rostin Benham, now the real chair of the CFTC, the Regulatory Commission for Commodities Futures Trading Commission in the US, came out a couple of years ago at a conference event. It's on YouTube, it's public. And he said when silver got to 30 during the silver squeeze movement, if everybody knows what that is, they purposely capped it at 30 to put an upside circuit breaker on it. And he admitted exactly how they did it. And that video is still there. It's public, it's not conspiracy. So they're managing silver. Silver should be much higher, but they need it for industry. So in essence, what we have is a very managed and controlled silver price. Now, gold is less managed. And what's happening is the rest of the world's breaking the London and the US hold on that market. They've held that market since 74. In 74, legislation was introduced to introduce the current system. And that's 50 years ago. 50 years hence, the rest of the world's tired of the US and London controlling prices for oil, sugar, hog futures, gold, silver, platinum, palladium, everything. And they're breaking that system. They're setting up alternative markets. JP Morgan, as a matter of fact, has been the last several years in China helping them build out their commodities exchanges to be the next big worldwide market. They're shifting east. They know what's going to happen in the US. They're shifting control east. Dubai has stood out now and stood up to London and said, we're not in your system anymore. We're creating our own system. The BRICS nations and all of their allies are creating the next system, and they're being helped by the big mega banks to do it. And so the Western powers are losing control. So the gold is leaving out the back door off of these exchanges at reduced prices. So is silver. And that's why you've had that gold rise. Gold and silver have gone up because the world knows there's a ton of risk in the dollar. And that's what's causing the gold and silver price to rise. Although they don't want silver to sit above 30 for any length of time. That's the magic number for silver. Once you get it sitting above 30 and you let it run, it'll go all the way past 50, probably to 100, 200 bucks. So they're desperately trying to manage it because if silver or gold really pops off, then that'll start people questioning the dollar. They're not ready for that yet. So all those prices are managed via the derivative markets.
The question persists, though, like, price suppressions can only work for so long, right? Because price suppressions create shortages because you're essentially keeping demand constant while supply is variable. And it's going to eat up. It's not supply is essentially not able to respond to the demand. So over time, this thing is going to unwind just because of the supply deficit that it creates. How much longer can they keep doing this? Until the silver price unwinds and breaks out above 30 bucks, 40 bucks, 50 bucks, etc.
To try to summarize this, it's impossible to know all the gold and silver exists in the world because a lot of it goes to private hands, and a lot of times it goes to private hands and we don't know. We know that most of the gold ever mined is still here. Most of the silver ever mined is actually sitting in landfills or sitting in products because that's how it's used. And so there are recovery methods, but we don't get it all back in scrap. We can't. Not everybody, takes their iPhone to Best Buy and turns it in, some throw it in the landfill, So there's actually more abundant gold in the world than silver, even though silver is more abundant coming out of the crust. And also, when you blow up silver in a Tomahawk missile, when you explode it, those 500 ounces are gone, right? So there's other reasons. Yes, there are severe shortages in silver. We used to have a stockpile of about 50 million ounces, according to the U.S. Geological Survey. We think that has been drained. A lot of the silver on the exchanges, the COMEX in London, are really low now. If you look at the Silver Institute and their research on mine production versus demand, the last, I think, 4 years, we've been running deficits, and it's getting close to 1 billion ounces. It's somewhere between 800 to 1 billion ounces. Now, that's current, right? So in silver, the last 4 years, about 200 million a year, a little bit more in some years, deficit of production to what we have. That's why you see the stocks on the COMEX and you see the stocks in London, draining, because they got to get that silver from somewhere if it's not coming out of the mines. With the managed silver price, it's been managed so long that a lot of the primary silver mines went offline, so they're not producing. You're looking at anywhere from a 2 to 10 year ramp up to get a lot of those mines back on, plus new mines. So there's going to be an event at which silver just absolutely goes bonkers. If we look at what happened to nickel, and we'll talk about nickel and oil real quick as analogs. Nickel, within the last couple of years, had an event where the price went straight up because on the LME, which is one of the exchanges in the UK, which, by the way, is owned by China now, I believe, or through Hong Kong as a proxy. It's owned by China. We kind of know that. The LME there was a temporary shortage of nickel, and the price went straight up. And then they got that managed, and nickel's very abundant. It was just a supply chain deal. But nickel wasn't priced correctly. There wasn't enough in the supply. They had to, nickel price had to go up and encourage more development plus more stockpiles to come out, and it solved that problem. Look at oil. It got to $140 a barrel, I don't know how many years ago, and then it collapsed. And then during the pandemic, it went negative. Well, how can the price of a commodity go negative? How can you're going to give me the oil and give me money? That's not really the way it works. It's on the derivative market, and that's a pricing, what do you call it? It's just a price chart. So when oil went negative, because all of the demand for oil collapsed during the pandemic, there were shutdowns, people weren't driving, all that kind of stuff across the world. Worldwide demand went down, and so they had stockpiles. So you had to almost give away oil to get it out the door from a derivative perspective. They didn't do it physically, but from a derivative perspective, They had to price it negative to solve that oversupply to demand. Well, once we ramped back up the economies, oil shot all the way back up again because, in all commodities, the world's running just in time. It's this old Japanese concept of produce what you need, get the best price for it. When we have these shocks either way in supply and demand, it spikes the price, right? We're not able to manage large events, either large demand or collapses in demand without those prices going crazy. So all of that to be summarized is, yes, eventually it will cause the prices to break out. There'll be a point at which the world realizes there's not enough metals, gold and silver, to fit demand, and that next marginal demand for that metal is going to take the prices straight up at some point. Now, it won't last forever. They'll actually overshoot their real whatever market value is, and they'll come back down. And that has been the pattern. That actually was the pattern in 2008, 2011 during the Lehman crisis. Gold shot up to an all-time high in 1900. Silver touched very briefly on 50. And then eventually they came back down as people got confidence in the system. This time, the system can't be kicked down the road. So all of this value, if you look at Exter's pyramid, sitting at the Exter was a central banker himself, and he was an advisor to Volcker. And Volcker asked Exter because he was a central banker friend and done central banks in other countries. He said, how do we manage this? And Exter came up with the pyramid. And he said, all these derivatives on top, stocks, real estate, all this stuff is a derivative of gold and silver. Even cash is a derivative of gold and silver. All of these contracts, mortgage-backed securities, are a derivative of gold and silver. Gold and silver are the ultimate money. This is the famous Exter's pyramid. And when you have these big economic collapses, all that fake value or money in dollars and stocks and real estate and all this other stuff that's in a giant bubble collapses down to the real assets, which are gold and silver. And we expect that's what's going to happen. And the central banks know this. The central bankers were the ones that developed Exter's pyramid. That's why they give you the dollars and they're buying all the gold. Because when the collapse happens through Basel III, through the BIS, Bank for International Settlements, the mega bank, which controls all the other banks, has now got it that gold is a high quality liquid asset. Well, why the central banks have been buying all the gold? They want to survive. So they're hoarding all the gold and pushing, the worthless paper crap out to the people. And that's essentially the setup. And then when it collapses, all the value is going to come to gold and silver. Now, if you're an individual and you've invested in gold and silver, that gives you an advantage because you can be like the central banks and wait for that price reset. And then hopefully it makes up for all the losses that you had and, helps you survive and keep your house and all that good kind of stuff.
Yeah. Well, exciting times ahead, Robert. Got to thank you again for coming on. Really appreciate your time. Anything else you actually want to talk about before we close things out?
I would just say go watch videos on central bank digital currencies. The proof in the pudding of everything I just said is in the development of central bank digital currencies. Go to the BIS website, bis.org, look at their projects section and read up all the projects. They're there in black and white. Go to the IMF and look up their paper on creating a cashless society, which they wrote in 2015. The proof is out there. Just go look it up.
It's all buried in the white papers.
Read the white papers. And once you read the white papers and they've been designing this system since the last collapse, at this point, you don't have to question that the collapse is coming because why would they be developing the system? And why are they testing it? And why is it here right now? It's here right now because they know they're going to need it soon. So you have a short window of time in order to make your own preparations to protect yourself, your families, your friends. Most people are going to think you're nuts if you talk about this. So that's fine. Most of the people never wake up until the collapse happens. It's true. And by the way, that's cultural. That is a cultural trait that is true of every collapse. So if you feel like you're talking about this and 99% of the people around you think you're nuts, that's normal. That happened in Rome. It happened in England. It happened in Spain. It's happened everywhere. But you got to do what you got to do. If you're awake and you're seeing this and you're following all this and doing your research and figuring out if you believe me or not, or believe you or not, once you get to that point where you feel like there's risk, go protect yourself. That's the main thing. And study up on central bank digital currencies. That, if nothing convinces you, reading those white papers will convince you. There's nothing else beyond that I could say.
Yeah, it's a conspiracy in plain sight. So it's an open conspiracy in a sense. We'll have the link to the Freedom Report down below, Robert. Anything else you want to plug?
No, just the Freedom Report. Oh, one other thing. I'm a board member for Citizens for Sound Money, citizensforsoundmoney.org. We're promoting legislation to make gold money again in the States. We almost got it passed in Florida last year. We were about a vote short. They commissioned a $200,000 study bill. We're going to do it again. We're going to do Texas. Gold is already legal tender in 6 states, Arkansas, Louisiana, the latest ones this year to do it. We're doing that to give people an alternative and to give you air cover that you can actually use gold and silver as money again without the feds breaking down your door. And if we can do that at state level, the only way that they can roll back that legislation is to one, roll back Amendment 10 of the Bill of Rights, which gives those rights to the states, and also Article 1, Section 10, Clause 1 of the Constitution, which says gold and silver are the only thing that any state can make a legal tender. So if we can get those state laws passed, Citizens for Sound Money, along with our partners, Missouri Freedom Initiative, Economic War Room, and all those guys, you will be able to use gold and silver as money again, and the feds can't stop you unless they basically repudiate the Constitution. And if they even tried to do that, you would have people saying, you'd have people at that point, I think, bring out the guns and say, no, you're going too far. So that's what we're trying to do. We're trying to set up a battle between the feds and the states' rights to give people the ability to use gold and silver as sound money again, or anything you want as money, really. But we're focusing on gold and silver because the Constitution gives us that right. So follow that, citizensforsoundmoney.org, and hopefully we'll get some of that legislation passed in more states in the upcoming legislative session next year.
Fantastic. Yeah, we'll have that link down below, so be sure to check it out, guys. If you enjoyed this video, give us a like, subscribe to the channel if you haven't already, comment, go Robert, go in the comments if you enjoyed this video. If you disagreed with anything, let me know what you disagreed on. Really interested to get your take here, guys. And with that said, I'd also like to remind you, for all your gold and silver needs, check out Miles Franklin, info@milesfranklin.com. Be sure to email them and tell them that Capital Cosm sent you to get special pricing you're not going to find on the website. And with all that said, all the YouTube stuff out the way, I'll catch you in the next episode. Bye, y'all.